All right, cool. That's better. Okay, cool. All right, so we're going to go ahead and take a quick look at the markets. What we got to go ahead and take a look at this morning is what the markets have been doing. And what I'd like to go ahead and look at, and I'm going to move to the charts right now and take a quick look over here on the chart. So let me just go ahead and say good morning, everyone. And it is Friday morning. We had a great session this week. A lot of trading opportunities this year. In fact, we had a lot of good feedback from a lot of students, illustrating exactly how well they've done over 2019. So 2019 being absolutely awesome. Now we're going to start looking for 2020, how we're going to prepare ourselves, how we're going to set up, how we're going to go ahead and look for great trading opportunities. I'm already starting to brace myself. Oh, where's my phone? I'm still trying to brace myself up for what we're expecting out in 2020. And so what I'm doing is I'm putting all the bits and pieces together in the trading room. The one thing that we're going to be doing right now, I'm actually going to show you on the screen. We're going to be doing a different type of setup where we're looking for trading opportunities. And the setups that I'm looking for is really going to be based on looking at the larger picture and then identifying what the directional bias is going to be, and then deploying systems in that direction. We've actually addressed that. We've spoken about it a few times throughout my trading sessions, and we're now actually going to go ahead and implement that into the live market. So with that being said, let's go ahead and take a look at what we currently have right here. And let me see here. So what I'm going to do is I'm going to show you a document here. This is the document that I'm going to be using here to deploy trade setups. And what I'm going to be doing here is I'm going to be identifying, of course, the larger directional bias, decide on what my trading plan is going to be, whether it's going to be buy support, sell resistance, or stand aside. It's going to be using, step 3 is going to be using a gear up, gear down trading approach. And yes, the traders that are part of my trading room, yes, you will get access to this document. This is the new document. In fact, it's available right now. You see below there. You can see there it says Game Plan 2020. And so that is the idea right here, is to create a game plan. And then, of course, step 4 will then be deciding what type of strategy we're using. You know, I've got different types of strategies that I like to use. We've got Wave Rider, which is in the learning trading room. We've got End Zone Trader, which is a trend trading strategy. And then we've got Targets, which is more of a counter trend type of strategy. Also, very important to use trend trading or counter trend trading strategies with inside consolidation, especially if the market's range bound. Then the target trading strategy works really well. And then, of course, deciding on the time frame based on your gear up, gear down approach, and then deploying, confirming whether you're deploying a system in a direction. Then obviously, updating the entry points. We do have commentary here on the right hand side. We're going to add some commentary on the right hand side right here. So we'll have space for that too, to be able to post some commentary as well. So that's that. And then as we go ahead and review, let's go ahead and take a look and see the markets right now. So I'm going to go jump to a couple of the pound crosses. We've just seen Aussie JPY actually blowing up to the upside as well. Seen some good movement out of the Aussie. So let's go ahead and take a look here at the Aussie. So the Aussie setup that we have here is set up that we're seeing price. And actually, I don't need that and I don't need that. Okay. So Aussie JPY is seen right now that is blowing up to the upside right here. You can see that the trend is super strong right now, in the sense that we've got a bullish uptrend, and the channel is currently holding. So what we've gone ahead and decided here on the Aussie JPY, we said that we had a bullish channel, We're buying at support. We're using a gearing down approach, which is a 1 hour time frame, and then we're going ahead and deploy the system bullish. And so what it's going to do is it's going to go down to the 1 hour chart, which is this one right here. I'm going to go ahead and flip it over to a 1 hour. And it's going to go ahead and look for buying opportunities every time it breaks the Ichimoku cloud to the upside. So here would be a buy opportunity right here. As price breaks above here, it closes out. This was on the 18th to 2000 hours, which is 8 o'clock Eastern Standard Time. The closing price was at 75.26. So 27. So 75.27 was the entry point. Stop loss is going to be pretty tight. You can see right here, a stop loss will be below this level right here. So we're looking at around about 25. Let's add 10 to that. We're looking at about 35 pip stop. 35 pip stop. So price is now moved up around about, let's see here. It's moved in around about 16 pips so far. And this is just the beginning. So the beginning. It is Friday. We're not expecting a lot of movement still to continue for the end until the end of the day. But we are seeing some movement to the upside. Stop losses will remain here. We got in on this trade a little bit earlier. We used actually a larger time frame. You see stops are right down here. We used two different types of strategies. One is, of course, using a larger time frame like a 4 hour and placing stop losses below the 4 hour. You see here, if I go to the 4 hour, you see where you can see that price entered here on this rally. Stop losses below here, and now we look for price to continue to move up to its target, which is a 3-to-1 risk-reward ratio at 76.93. Now, the target that we're anticipating on this particular pair is going to be set up right about here. Let's see here. We've set the target. Oh, hang on. I got to go to the daily. So here's the daily setup right here. And so we're looking for price to go all the way up here to about 77.60. 77.60. So if I'm looking at this and I'm looking for price to be at 76.93, then I may need to be paying special attention as price moves up. In fact, sorry, my bad. Let me just see. So 76.93. Oh no, we're good. Yeah, we're good because look at price could move up to 77. So that's another 100 pips past that level of where we're looking to get out of the trade. Now we can trade this all the way to the top until the market hits that resistance. Resistance is going to be our channel line right here. So looking for price to hit that channel line and then looking to get the heck out of Dodge. So that's pretty much our setup here on the Aussie JPY. We'll still stay bullish. Obviously, key things here that are picked up is that we're moving in a little bit of consolidation right here. We need to break out of that those highs. With these that last high right there, we need to break above that last high. And if we can break above that and stay above that and not show any sort of wicks like we have over here, I don't want to see this type of scenario where we have a wick showing right here and then price moving back down again. So we definitely want to make sure that that is not the case. And let me just go ahead and kill this quickly here and then just reload it again. All right, so we'll be looking out for that. Also, what we'll be looking out for is our I need to grab a tool here. Let's pull this across here. All right, there we go. So what I'll also be looking out for right here is making sure that we stay above that. And as price comes back down, making sure we don't go back inside there as it starts rallying back up north. So I'm going to be looking at this and seeing exactly how this is set up. But this is where we are right now with regards to the trading opportunity on the Aussie JPY. We actually had some good movement out of the pound pairs this morning. It was struggling over the UK trading session. But let's go take a look at the pound crosses because we've been looking for the pound pairs to hit bottoms and hit support and start bouncing off. We've seen a nice little dip over the last few weeks. But in fact, this last week since the elections last week. So elections pushed the market up. Then we had the following day we had now a deep correction move because the market completed its fifth wave on most of the pound crosses. Now, with that being the case, let's go ahead and take a look and see what the markets are doing on that. And I'm going to go ahead and zoom in on this right here. Let's go to pound Aussie right here. So there's that dip that we had. There's the rally during the UK election. The market pulled back. So let's go break down. You know, I've started a new workspace here on smarttrader.com, and my workspace now needs to be updated. So let's go ahead and go through this process. This is what we're looking for. So the first thing we're going to do is we're going to identify our channels. Once we identify the channel, then we're going to go ahead and identify the trading opportunity. So right here, I'm going to go, and I get it. I get it that the long-term down AB move is something like this. And this is just a correction inside that long-term AB boundary. So what I'm going to be doing is, because I know that, I'm going to be looking to also possibly sell at the top. So I see price possibly wanting to move back up north, because look over here. We have a bit of support coming off this level here. I'll put that channel lines there. There it is there. We've got a bit of, well, it's now become a resistance. It was support, become a resistance. So we've got a bit of resistance coming off that line there. But we're still inside this upward channel too. So this is the upward channel. So we're still seeing that there's a very high probability that price may still want to move up a little higher before actually going back down south. Now, as long as we stay inside this inside channel, we know price is going to continue. And let me go ahead and adjust it. Right, so there it is there. So that's the adjusted channel. I'm going to actually move this up there. So we know that price is going to want to come back to retest. And if this is the high, then yes, we'll get a retest of this trend line right here. So I'm looking for price to possibly want to go ahead and move up, retest, and then move back down to the bottom of the channel. And if it breaks through that level of support right here, then we'll be looking for price to move down towards this level, which is at 182. And this could ultimately take the market further down south. As you can see right here, we're looking for the 1.698 all the way down here at 118.14. So this is the pound Aussie right here. So if I were to update my my trading sheet, I would say that we are in a uptrend right now. All right. So I'll go ahead and say, let's go to pound Aussie right here. I'd say, okay, we're in a bullish channel. My trading plan right here would be to buy at support. Now, because we are trading inside this channel, and the channel is pretty wide, because if you look over here at the channel from top to the bottom right here, looking at about 730 pips. So we could trade at the top of the channel and trade it back down south. So although we're in a bullish setup right here in the sense of the channel, we may want to go ahead and think about actually trading at the top, selling it back down to the bottom of the channel. So my trading plan would be here, would be saying, well, instead of buying at support, we could go ahead and sell at resistance towards the bottom of the support. And what I'd probably want to go ahead and use is a more of a gear down trading approach. All right, gear down trading approach. I'm going to go ahead and say gear down. Now, what does gear down mean? Gear down means that I'm going to go down to my 1 hour time frame. And here's the 1 hour right here. I'm going to open it up. And I could use different trading options. I've got, I'm going to say, let's say end zone trader for right now. End zone trader would have offered us an opportunity to go ahead and actually sell at this point right here. So this would have been our sell right there. So it would have been selling on the 17th of December around about 8 o'clock in the morning, selling right there, putting a stop above the major high, and then looking to move down. You can see how much profit there was up until this point, 307 pips. And then every time the market goes above the cloud and sells back down again, we'll re-enter and sell again. So, and what we're doing is we're chasing after a bottom, all right? And what is the bottom? Well, we go back to the daily right here, and we're looking for price to eventually move down to this trend line. When it gets to this trend line, we're going to stop selling, and we're actually going to start thinking about buying, all right? Now, if it blows through that trend line, then we'll stand aside and then continue with the downward action towards this level right here. So this is what I'll be expecting. If price goes ahead, and let's say we do rally up here, we'll be selling right here at the top again. Go down here, we'll be looking to buy over here. But then if price breaks through that level, then we're going to cancel out any buys, look for the market to go back up again, sell once again back at the back here, because we're chasing after this trend line right here. And we'll be looking to profit all the way down to this bottom right here, and then look to buy again. So we'll be bouncing back between support and resistance, buying at support, selling at resistance, and depending, of course, how wide the channels are, we'll be making a decision as to whether or not we'll be buying at support, selling at resistance. Again, if the channels are tight, then maybe we'll just go ahead and stick to the upward channel and buy off the dips of support. And if the channel is wide enough, then at the top of a bullish channel, we can go actually sell at the top of the channel and then trade it back to the bottom of the channel. It's a very simple concept. I mean, it's not something brand new. It's something that's been out there a lot. A lot of people actually, in fact, have watered down the importance of trend lines and channels. And these trend lines and channels are absolutely key. And I guess it's how you trade it, and that makes it that important and that effective. So we're going to go ahead and do this. So this is going to be derived. You can see right here as we go ahead and identify our trading opportunity. Then what we're going to do is we're going to update our document and say, okay, so right now we get selling on a. Now you can use any type of trading strategy. You see we got Wave Rider right here. A Wave Rider would be something like this. Just to give you an idea of what it looks like here. A Wave Rider would be this. So we would have had a sell opportunity down here, and traders in my trading room know what that means. It would be a sell opportunity right on this candle. So the 17th looks like a little early entry point here at 3 o'clock in the morning on the 17th. At 3 o'clock in the morning Eastern Standard Time, the closing price was at 92.67, and price has gone ahead, and let's go ahead and clear that up. Price has gone ahead and dropped back down south about 380, call it, yeah, 300, actually dropped down further, almost 400 points. So a 400 pip drop right here. Stop losses using the 1 hour would have been really tight. You'd have used maybe a 100 pip stop loss. So you're looking at a 1-to-4 risk reward ratio, right about where it's trading right now. So those are the type of setups, those are the trading opportunities that we're going to be focused in on as we move into 2020. Now, traders, remember, I did mention, for those that have subscribed to the YouTube channel, congratulations, well done, excellent. I'm glad you guys have subscribed. Make sure that you go ahead and push the bell button as well so you can get notifications as I go live, because I'll be doing some live streaming on the fly during the week as price starts moving around. And we're going to do similar live sessions to what we have right now. I'm going to try and get a chat room up to be able to get some questions and answers taken care of. But also the main thing is going to be really taking anything between 15 to 20, let's say 15 to 25 minutes of your day to be able to just look and break down trading opportunities. And all I'm going to do is really go ahead and move to the larger time frame, identify, and we'll have this already completed. We'll have all our technical analysis set up right here. So we'll know that we're looking to sell at certain levels. We're looking to buy at certain levels right here. Here you can see. We'll be looking to buy at certain levels like this. And we'll be able to know well ahead of time what we're looking for. Now, the most important thing for you as a trader is to be able to lock in on a trading strategy, right? Particularly a swing trading strategy, and then maybe incorporate some sort of range trading strategy. My swing trading strategies are going to be the Wave Rider. Oh, just drop my mic. Give me a second here. All right, we're back. All right, I've got my mic hooked up here, and I keep pushing it down. Anyway, the main thing here is that you're gonna find a swing type of strategy and a consolidation or range bound strategy. Now, my strategies that I'm going to be using as I move into 2020 that I've been focusing on in over the last few months, getting myself ready and prepared for this is End Zone Trader and Wave Rider. End Zone Trader and Wave Rider is going to be my swing type strategies, which is used in the learning trading room. And then, of course, the target trading. Target trading, I'm going to be focusing on daily, weekly, and monthly targets, and using that when I identify consolidation. Now, what does that mean? That means like this. So let's take a look at the chart here. If I go ahead and grab a pair, and I did have Aussie JPY. If you take a look at Aussie JPY right here. Now, Aussie JPY is not a consolidated trading pair, right? It's not a consolidated pair. But if I go to this chart right here, and you do notice here, say you notice that the market's consolidated right here. Well, when we have this type of consolidation, where price is not breaking out of a level, right? So it's It's coming off here, then it's bouncing off here. Oops, let's do that. Bouncing off here, bouncing off here, and bouncing off here. When we have this type of consolidation in play, and remember something, this has been since November, let's say beginning of November, end of October. So it's been almost, to call it 1.5 months of sideways ranging. Now, when you get this type of scenario, we can go down and trade targets based on those, which means targets are going to be counter. So when the market's actually going ahead and trending in a direction, it's actually buying against the trend. But that's because it doesn't believe that the trend is going to continue, that it's going to come back up to its regional entry, or at least a high or low, or support and resistance, and then go ahead and continue with its downside action. So the good thing about this is that we can benefit from range-bound trading. Now, we may find pairs that are range-bound, that are not trendy. And those pairs, we may want to go ahead and just deploy that type of consolidation strategy on that, because we know it's range-bound and it's not going to go anywhere. In fact, a very popular consolidated pair would be New Zealand, Aussie-New Zealand dollar. If you actually go to Aussie-New Zealand dollar right here, you can see that we've got a very, very large range here. In fact, if I go ahead and pull this up, from the top to the bottom, we've got about 1,000 pip range. So it is a large range, but price seems to be, price doesn't move very aggressively in a direction. It very seldom has that. In fact, if you take a look at the movement that we've had now over the last, well, since 2014, look at this. Look how price moves up, then comes down. It moves up, then comes down. Moves up, then comes down. It goes down and then comes up. It goes down, comes up. Then goes down, comes up again. So this for a target trader, this is a fantastic opportunity. All right, because price comes back to these levels all the time. So every time you get picked up, and we know sometimes you get picked up in 5, 6, 7, 8, 9, 10 positions, and then when price comes back up again, you're scoring big time on those trades. So I'm definitely going to go ahead and have a recommended pairs that I'm going to be looking at just to trade just targets on, and not even look to change it. Just keep it running on that pair, because we know that price is going to come back to those levels. Now the question here is, we have different types of targets. We've got swing, we've got monthly, daily, weekly targets, right? And so depending, of course, how big that range is, will be dependent on what type of target we trade. So if the range is that big of 1,000 pip range, then we may move to the weekly targets. If it's something a little bit tighter than that, we may go to the daily targets, so we pick up quicker profits on that. So depending, of course, on the target. But this is the idea and the trading approach that we're going to be doing as we move into the 2020 trading room. I'm excited about it. I hope you guys have had a great 2019. I'm still going to go ahead and do some more commentary and broadcasting next week. Just give you guys a little bit of warm-up. On the fly, different live sessions. You have to subscribe to the YouTube channel. Go ahead and do that. We'll go ahead and update you. And of course, I'm wearing my lucky shirt for this weekend, because what's happening? Dallas and the Eagles are playing. And guess who's going to win? You got it. You got it. It's Eagles, right? It's Eagles. All right. So you guys have a fantastic weekend. We'll see you guys next week. And remember, we are going to be breaking down the markets in a 15 to 25 minute sessions, live sessions on the fly. Get subscribed to YouTube. Make sure you subscribe and click the bell button. I can't explain that. I can't iterate that more than I have already, to make sure that you go ahead and click on that bell button, because if I go live, you're going to be notified. All right, and we're going to go ahead and kick this out early next week. A couple of live sessions next week, but we're really going to hit this hard in 2020. I'm really starting to work up my schedule to make sure that I allocate at least half an hour a day. I don't know if I'm going to be able to do it every day, but I'm certainly going to try and see if I can get half an hour every day just to go ahead and talk about some setups in the market that we need to look for. And it's going to be using a very simple concept based on support and resistance. All right, based on support and resistance, using channel lines to identify trading opportunities, but then using systems. Systems are awesome, and it takes us away from sitting in front of the computer all day, all long. But you have to make sure that these systems are customized, and the settings and the inputs are set for the right environment. That's why we keep talking about a gear up, gear down trading approaches. And if you haven't seen my series on gear up, gearing down yet, please, I've got part 1 and part 2. Check out my videos on YouTube. Part 1 and part 2 is going to give you more or less a guideline as to what we're looking at. We're not done with the series. We've still got some more parts to come, but this is a good starting point and a good foundation to start off with your 2020 trading. Traders, with that being said, have an awesome weekend. I'll see you next time.